CPI to the rescue. Hey, it's Eric Ossis here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending November 11th, 2022. Well, the markets have been anxiously awaiting the October CPI inflation numbers for weeks, and they did not disappoint. CPI came in significantly lower than forecast for the month of October at 7.7%. That's down from 8.2% in September. But the big news was in the core reading, which excludes food and energy costs. That came in at 6.3%, down from 6.6 in September. Even more important, though, was the cost of shelter. Shelter readings were still high. Why is that good? More about that in just a minute. Shelter overall was up 0.8%. That's 6.9% year over year. But breaking it down, there's a couple components of the shelter index. Rents, which were up 0.7%, and owner equivalent rent, that's based on a survey of existing renters, tenants, as well as new leases, was up 0.6%. Wait a second. If rents are up 0.7 and owner equivalent rent was up 0.6, how did overall shelter go up 0.8? Well, the reason is because the overall shelter statistic also includes lodging away from home, which is up a staggering 4.9% for October. Guess those hotels are starting to rake it in right now. Shelter comprises a big chunk of the CPI index, 39.3% of it. And that's good news because shelter is a severely lagging index. And economists expect the shelter index to drop significantly in the months ahead, along with other inflation components. And it's, shelter is dropping because higher interest rates have slowed the housing industry. So we're seeing less housing activity. We're also seeing rents coming down along with it. So shelter will be dropping. It just takes a little while. It's a lagging indicator. So a little bit too early to celebrate, but it really looks like we may have turned the corner on inflation, meaning that we could see lower mortgage rates in the weeks ahead. And as a result of CPI, bonds had their strongest rally in almost 10 years yesterday, pushing mortgage rates lower. Here are the national averages. Conventional 30-year fixed rate, 6.62%. That's down 0.5% from a week ago. 15-year fixed rates, 6%. That's also down about 0.3% from a week ago. FHA and VA 30-year fixed rates, those are coming in at 6.2%, down 0.42 from a week ago. And jumbo 30-year fixed rates, 6.1%. Those are down also about 0.25% from a week ago. So good news all around with that. Now, with these rates dropping, there's going to be a question. What is a float down option? Now, here's a little bit of inside baseball for you, and not every lender wants to talk about it, but I will. If you already have locked in your interest rate and your loan has not yet closed and rates fall dramatically, you may be able to float down to a lower interest rate. There are rules. We're bankers after all. Basically, rates have to fall at least about 0.25% to take advantage of a float down. And it's not free. There is a float down fee, which is typically about 1 point. That's 1% of the loan amount, but that can be built into the new rate. Why is there a cost at all? Well, because as a lender, when we lock your interest rate, we actually have to pay to hedge the risk of that rate lock. And if we're floating you down, we have to break that lock with our investor, and it costs us money to do that. So here's an example of a float down. Let's say you locked in your rate at 7% and rates dropped to 6.5%. You could float down to the 6% rate. There would be a cost of 1 point, 1% of your loan amount. Alternatively, we could give you all but 0.1% of that drop. So instead of going down to 6.5, we set your rate at 6.625, and there would be no cost for that. Either way, it's a good news proposition. Now, a float down is not an automatic thing. It's something that, as a lender, we need to manually check on for you. So be sure and check with your lender, because also not every loan program will allow a float down. Some of our jumbo loan programs and certain ones do not have that option. So be sure and check to see if your loan might be eligible for float down. Finally, I'm recording this video on Friday, Veterans Day, and to all of you that are wearing a uniform or have worn a uniform in the past, thank you very much for your service. Our country's greatness is built on the foundation of your courage, your service, and your sacrifice, and you really have my sincere gratitude. So thank you. I'm always here and available to answer questions regarding mortgages or solve those complex story problems. You can call me 206-915-3742. You can email me eric@ericismybanker.com or check for me on social media. Just look for Eric is my banker for my weekly updates on mortgage rates. That's all I've got for you today. I hope you have a great weekend. Again, thank a veteran if you know one, and talk to you next week.